Welcome, everyone. I think we probably have a sufficient number to get started, and I don't want to keep anyone waiting who is here in a timely manner. So let me start quickly with some housekeeping. The audience is going to be placed on mute throughout the duration of the webinar. We are, however, going to take questions and leave time for Q&A at the end. So if everyone can please post any questions that they might have into the chat. I believe there's an icon at the bottom of your screen for posting Q&A in the chat. We'll come to those later. If we don't manage to cover all the questions today, and I know we've got quite a lot of content to get through already, we will endeavour to respond to those later in writing. And the webinar is being recorded today. We're obliged to let everyone know that. Check you're comfortable with that. It will be distributed to all attendees. So hopefully everyone is comfortable with that, and we will get going. Let's start with some introductions. I'm Natalie Taylor. I'm the Director of Client Solutions at Climate Impact Partners. Thank you so much for joining us today for the first in our series of In Conversation With webinars, part of our Ambition to Impact programme of activities. Today, I'm delighted to be joined by James Streeter from Tandem Bank. We're going to be talking about how he's supporting that organisation in turning their climate ambition into impact. James is Head of Sustainability at Tandem Bank and hasn't been there a very long time, but has had a really lengthy career in sustainability. James, could you perhaps give a bit of an introduction to yourself?
Yeah, sure. Thanks very much, Natalie. So I'm probably one of the first generation to have their entire career in sustainability, starting back in the early 90s when it wasn't even called sustainability. In fact, during my master's was the first Rio conference, and where the sustainable development and sustainability were really coined.
Yeah.
So I had to forge my own sort of path, did a biology and geography degree, worked on some environmental projects for a year, environmental management masters, and then into the heavy industries. So I found myself in Siberia on month 2 on an oil field. So back then all the effort and all the jobs were in the highly regulated sort of heavy industries where it was very much a mitigation and compliance agenda. And then as that agenda, I worked for many years in oil, gas, mining, heavy industry. And then as that agenda moved into the sort of the whole of value chain, consumer driven, then I moved into food and beverage with a global flavour company. And then really trying to bring that value chain approach back into other industries. So yeah, as you said, this is my first role in financial services. Been in Tandem about 18 months.
Great. Wow, what a varied career. I hope we get into a bit more of that a bit later. Before we get into the details of what Tandem Bank is doing and what you're doing with Tandem Bank, I'd love if we could set a bit of a scene for our discussion. And it may not be immediately obvious for how the financial services sector and specifically banking can really impact the environment. So I'd love to hear your perspective on why organisations in this space should even be thinking about taking action.
Well, I mean, fundamentally, it's about the energy transition and the science is we've all got to do our bit. And so every company or every individual, of course, they're not obliged to do it, but should be thinking about this. So important that the capital is deployed to help that journey, and so Tandem sees it very much as an opportunity and is specifically focused in sort of greener sectors.
Yeah.
In the UK. There's also regulation, so you can't shy away from it. Financial services, quite rightly, is highly regulated, and that is now sort of spilling over into the greener space.
Yeah.
And associated with that is just good business practice and things like risk, good risk management. Climate's very complicated, as we all know.
Yeah.
And climate risk management is equally complicated.
Yeah, absolutely. And so I guess thinking about some of those kind of real fundamentals of, how you start a strategy, can you just start with some of the basics and tell us a bit about what are the activities that contribute to your carbon footprint at the bank?
Shall I just give you a little update on Tandem, just so I can step in?
Please.
Yeah, okay. So, because I'm not sure everyone would have heard of Tandem. So it's got an interesting history, but really about 3 years ago, it came together in about 3 companies were brought together to form the sort of what we currently are as Tandem. It's UK retail bank, digital fintech, you might say. One of the challenger banks that came out of the financial crisis and then remorphed into being very focused on the green agenda.
Yeah.
So we're aiming to sort of to provide, banking, what we call banking for a greener future. We've got this tagline, which is banking shouldn't cost the earth, and it's absolutely right. It's and so we see it very much as a way of enabling. About 500 employees, although we're spread around the UK, we have 4 offices, and we're headquartered up in the northwest in Blackpool, which is one of the big companies that came into the mix. That's where they were based. We just a few numbers. We have around 300,000 customers, 3.6 billion in deposits, and around about $500 million a year we deploy in what we call green, or our pathway to green lending.
Yeah, great. And the other note I have here says that 100,000 green or pathway to green customers.
Yeah, that's right. So with that $500 million sort of capital, which is deployed into those loans. So come on to that later, because it's really important about how you define what's green or not.
Yeah, perfect. Thank you so much. Don't really want to go back to my boring fundamentals now, but I'm told I'm asked to look at what are the emission categories that you count in your own operation carbon footprint.
Yeah. Okay. So everyone is aware of scopes 1, 2, and 3. Our scope 1 is very light. It's typical for financial services. It's obviously so we've got 4 offices, so
yeah,
it's really very, very minor. So that's scope 1 and 2. We don't operate our own fleet as such, so it's very simple. And if you just put those in numbers, scope 1 and 2 are in sort of single digits, really. When you start getting to scope 3, that's when it all gets a bit bigger. So our operational emissions, which is really pretty much everything. So categories, there are 15 categories in scope 3. 1 to 14, we're around about 3,000 tonnes, and that's what we call our operational emissions. Of course, that's what we've been working with you guys on.
Yeah.
The big ticket is category 15, our invested emissions. Through our investments, we effectively part own lots of houses, lots of heat pumps, solar panels, windows, gas boilers, motor vehicles, you name it.
Yeah, absolutely. And tell me a bit about how you get your arms around that part of your greenhouse gas accounting, because as you say, that is not insignificant and not quite as straightforward as your offices.
Yeah, it's really hard, and I think, look, just the first thing to point out is this is so fundamental to sustainability, is don't let perfect be the enemy of good. You've got to make a start.
Yeah.
And so what we do is, like, so if you're measuring, obviously your scope 1 and 2, that's easy. You get whatever. Supposedly easy. You get a gas bill, electricity.
I know some of our clients would disagree.
Yeah, no, that's right. So where I started out in oil, gas, and mining, scope 1 and 2 was massive. Obviously scope 3 in oil, gas is the world. It's huge.
Yeah.
But anyway, so our scope 1 and 2 are relatively easy to measure, but there are challenges with trying to get figures out of serviced offices. The scope 3, it's the big one is the sort of the first one to think about is a spend on goods and services.
Yeah.
And that's really all about engaging with our suppliers.
Yeah.
And so we're on that journey now. And then lastly, it's the invested emissions, which I mentioned, and that's around about 230,000 tonnes.
Yeah, great. Moving away from the basics and looking all the way to the horizon, tell me a bit about your ambition and what climate targets you've committed to.
Yeah, okay, so net zero, first of all. We've committed to net zero 2050, and as I guess 2 interim steps, just to show our ambition, we're committing to scopes 1 and 2 net zero by 2030. But it's said that's decarbonising our offices, really.
Yeah.
And we're in the process of developing a scope 3 interim near-term target, which is really challenging.
Right. Yeah.
So that's our sort of our net zero. But on top of that, of course, because we're very committed to this journey, we are offsetting our operational emissions every year as we go. We started with our baseline year was 2023.
Yeah.
We started setting the 3,013 tons.
Yeah.
Through with the good help of yourselves.
Yeah, thank you so much for choosing us. Thinking a bit about the journey there, as you mentioned, and acknowledging that you've had, a really long career in sustainability and only sort of part of that in the financial services sector. Can you talk a bit about, I suppose, the general challenges, but maybe how any of those feel sort of specific to the financial services space as you're on that climate journey?
Yeah, so it can be quite a bumpy ride, sustainability career. It's sometimes seen as a sort of a nice add-on, nice to have, let's make some money and then we'll do sustainability. But probably about 10, 15 years ago, the whole narrative completely flipped. And it was basically, I remember a very inspirational boss I had at one company. She said, it's no longer about deploying the money that we earn. It's about how we make that money in the first place. So It was really about building into the very operations of how you're doing. And of course, now we see it as an opportunity.
Yeah.
So you've got a shifting landscape. So you could see it really as a burden, like, with a totally changing regulatory landscape, markets changing, customers are fickle, risks are going through the roof, You could see it as a real challenge. And it's certainly one that keeps me interested. But you've got to also see it as that disruption of that opportunity to actually sort of create something which is new, have that impact.
Yeah. Tell me a bit more about regulation and how that feels different, because obviously you're now in a regulated space, and tell me how that feels different when you're incorporating things like climate risk in a regulated space.
Well, it's ironic actually, because I started in oil and gas, which was highly regulated.
Right.
So the reason that there were jobs back then was because you've got to do this to get your permit, your permit to operate, really, your license to operate, and that was formalised in things like environmental assessments, and then it was informalised, and it was sort of like with a social license to operate. So whereas it wasn't sort of written down and regulated, companies very quickly knew if they didn't have the social license to operate, then they wouldn't actually be able to operate. So they may be shut down, significant brand, reputational damage, etc. So the regulation was kind of always there, whether it was foot out, feet walking out the door, or whether it was actually through the sort of government and international sort of policy. So obviously banking is highly regulated, and that's now, quite rightly, after what happened in 2009. That's now moving more and more into the sustainability space as well. And it started off very much with drivers like Task Force for Climate-Related Financial Disclosure, the reporting side of it, and fundamentally what that was, financial services, it was basically saying, looking at risk. If I'm going to invest in an asset or an opportunity, I don't want it to fall over because of climate. And on the other side, it was about sort of actually the carbon accounting. We need to put something in place here so that we're not double counting all of those Scope 3 emissions. So that really drove it. And frankly, starting off with a good report is a great place to start, because it's like putting a mirror up, looking at, and it's really, and look, I'm right in the midst of reporting. I'm sure a lot of people are at the moment as well. And it's a bit of a crazy time of the year, right? And it's only when you really start to go through it and start to get your auditors or your lawyers or whatever, sort of like critiquing every line, that you go, wow, how green are we? Are we really doing this? Can we justify this? So one of the new pieces of one of the new rules that came in last year through the FCA is a anti-greenwashing rule. So Q1, Q2 last year, there's a lot of activity of financial services companies making sure that what they said could be backed up in evidence, justified. So that's an example of a piece of legislation coming in, a regulation coming quite quickly. Right, this is what you're going to do. But then on the other side of it, you've then got to be sort of looking on the horizon for policy changes. For example, I mean, every time a government gets elected, they shift the goalposts on when we're going to have, get rid of our internal combustion engine vehicles, for example. So, and what happens with, say, landlords and the EPC ratings in homes, and all of these kind of things do affect us. So we actually work risk scenarios around these things, build them into our strength, into our ICAP, as it's
Yeah, I think that picks up on, I think, two really pertinent themes that we see. The first is it's so fundamental, the old adage, what gets measured gets managed. And it is so true that once you do collect some data, hold that mirror up to yourself and see what you're doing or not doing, it does start to make a difference. And I think the other thing you've really pulled on there is that kind of integrity and transparency, which I think quite rightly, perhaps after what we saw with the banking crisis, is so important. It's so important to be happy to hold yourselves up to scrutiny and to operate in a transparent way, because people are going to ask questions, and you need to be able to respond to them.
So it's interesting on that sort of measured and managed piece. So at some points in my career, I've been working, working in Africa and in mining.
Yeah.
And the social, community interaction and impact, really hard to measure, but the impact on us was massive.
Yeah.
And now it's sort of flipped the other way, where financial services, it's all about the numbers, and obviously you've got very numerical focused people in the business in the board. They see the numbers and they're like, right, what are these? And it does start to get quite competitive. I mean, even with things like scope 3 emissions.
Yeah.
We're reflecting having such a very large, relatively large for the rest of, compared to the rest of our emissions, scope 3.
Yeah. Is
that a bad thing? Now, my view, coming in from sustainability, is that we've got to get on this transition. It's all about the energy transition. That is our opportunity.
Yeah.
We can bring that down. We can have customer impact through that.
Yeah.
So, it's really about the lens you put on it sometimes.
Yeah, I think that's absolutely right. And I think we think the same way. A large part of our carbon portfolio is projects in Africa. And so that kind of on the ground impact, that engagement, that sort of involving people in the conversation is really important to the nature of our business, to our projects. And I think you're absolutely right. When we think about scope 3, it's very easy for a company to say, well, scope 1 and 2 I can easily take care of, so I will, and scope 3 is a bit hard. And actually, I think you're quite right. I think so much around scope 3 is using your leadership, using your influence, using your knowledge, using whatever it is you might have to engage those people in the conversation, so that we are all sort of pulling in the same direction, I suppose.
I think this concept about scope 3, and it sounds like it's a very dry thing when we start to carbon calculating and trying to rack this all up. But you take the concept of it and it's fantastic.
Yeah.
And one of my bits of advice would be apply the sort of same scope 1, 2, and 3 principles across every sustainability aspect, because it's basically getting you to focus outside of your immediate boundaries. And this is the key to the value chain approach, because depending on where you are in the value chain, your biggest impact and opportunity is likely to be outside of your four walls. And so you must, when I was working in food and beverage flavors, for example, middle of the value chain in a manufacturing company, we had farmers and growers providing the raw materials, and you have then the food and beverage manufacturers and retailers at the other end. Some of our targets referred, steps away from us in either direction. Biggest impacts can sometimes be the growing of the raw materials.
Thinking about that, thinking about kind of those, upstream and downstream emissions, what are some of the, and thinking about, the efficiencies in your program, what are some of the actions that you've been taking to look at reducing your footprint either within your own operations or to affect that change of behaviours in the supply chain?
Let's sort of go through them. So scope 1, relates to burning of effectively fossil fuels. So we actually moved offices in Cardiff away. It sounds very sort of small scale, but part of the heating of the building was from a gas boiler.
Right.
So this figure came up. Instead of having nothing in scope 1, we had a number 30, 40 tons, something like that.
Yeah.
By moving office, get rid of it. Scope 2, obviously renewable energy, but then you work on energy efficiency means. So looking at your office services, how can you reduce that? Water consumption. Certain amount of waste management, but to be honest, it's so small for us, and to be honest, it's also quite difficult to do because you're in a serviced office. But then when you get down to scope 3, so the two main ones, working with our suppliers, providers of goods and services. So at the moment, our calculations are based on greenhouse gas protocol, basically by emissions factor for the different scope 3 categories, plus spend. But what that does give you very quickly is, and this comes back to the reporting, why it's good, is it gives you very quickly your prioritisation of, where's the bang for the buck, where our emissions are, go after those.
Yeah.
So we're now working with our suppliers. We've issued a questionnaire, try and get some fundamental information back. So then we'll be able to work with those that say have the biggest impact.
Yeah.
We can start engaging with them and helping them to first of all find out, are they just using an emissions factor, or are they calculating emissions, then try and reduce those.
Yeah.
The big ones, of course, is our invested emissions, so our loads.
Yeah.
And it's those that, that's where we really see the opportunity. And what we're trying to do is to, look, we realise we're no bank has got a particularly huge amount of green portfolio at the moment. But it's all about how you shift that, continue to shift it.
Yeah.
And what we're trying to do with things like motor finance, for example, is to engage with electric vehicle dealers, brokers, and really push our products, push our green backing.
Yeah.
We did some customer segmentation, so did some marketing analysis, and found that there is quite a strong market for what we call our sustainability champions.
Yeah.
That are prepared to go. I'm one of them. I suspect we probably all are in the team. It's about, would you do something extra to if it was more sustainable? So we can pitch to that market and to tell them there is such a thing as a sustainable bank. We do not have any baggage. We do not invest in heavy industry, hydrocarbons, none of that. All of our investments are our loans for people's houses, their vehicles, home improvements.
Yeah.
So it's really about sort of trying to get that message through, and that way we can start to shift our loan portfolio towards the greener.
Yeah.
So we created in order to show that, we realised that, sorry if I'm preempting your questions.
No, this is wonderful. You carry on.
So what we found was really important, coming back to the greenwashing piece, you've got to be able to benchmark yourself really securely to a taxonomy. And we've chosen the EU taxonomy because we believe that's the best in the world. And there isn't a UK one at the moment, that's still being kicked around. If you can benchmark all your products to the EU taxonomy, when you have a green product. And what we found was that there's so we took our motor finance, home improvement loans, mortgages, fit them in, all fine.
Yeah.
But we realised that there was this, we wanted to bring our customers on a journey. So we decided to create our own category, which is what we call Pathway to Green. So you've got green EU taxonomy. Now, Pathway to Green meant that it had to be above average.
Right.
So it was a progression, obviously. The name's on the tin.
Yeah.
And by doing that, it just generally makes you feel better. And it makes our customers realise, oh, right, we're on a journey here. Yeah. Right? So if you create that, you declare what's green by EU taxonomy, no greenwashing, you clearly frame out what your pathway to green definition is. Yeah. And then you can start to talk about that with confidence.
Yeah, and I think you're so right. I think so much about, sustainability is about setting a direction, thinking of an ambition, moving in that direction. It's a pathway, it's a journey. And I think gone are the days when companies are expected to make and achieve big, bold claims. Actually, what you really want to see from companies is that they're moving in the right direction. They're doing the right things. They're incrementally increasing and improving.
I think there's three key areas around sustainability. And picking up on that one, trust. Okay. Fundamentally, it's about trust. It's about de-risking. There's about the market opportunity. Yeah. You can move into different markets. You can have different price points. Yeah. We all now know that if you buy something organic, it's going to cost a little bit more. However, if you could, there's a lot of mortgage companies, including us, we offer a discount if you have a high EPC rating. Right. Right. So sustainability offers these different sort of price points, opportunity to move into different markets. And what we want to do is be a sort of a leader in that, move into that space. but they trusted relationships. It gets you a seat at the table. And
Yeah.
corporate, so fundamentally the base of all this is that us as individuals have no obligation to do anything on climate change.
Yeah.
Right? There's no regulator, there's no climate police, we can go and fly wherever we want, ride whatever we want, burn whatever we want. You know, I mean,
not in Lambeth you can't. Lambeth,
yeah, okay,
you can't burn anything you want at Lambeth.
Yes, no, but that's not carbon. Right? So you know, companies, of course, and governments, regulated, have shareholders driving and giving us boundaries and targets, etc., to make change around climate. Individuals do not. So we as a retail bank have to, on one side, highly regulated, on the other side, no regulation effectively, as far as our customers are concerned.
Yeah.
So for us, building trust is fundamental, as well as then offering great deals.
Yeah.
And just showing them the way.
Yeah.
You know, you add the education piece in there.
Yeah.
We try and link that up.
Yeah. Yeah. Love it. Thank you so much for that. I'm obviously convinced, because I'm also a sustainability professional, so I wholeheartedly agree with everything that you're doing and everything that you're saying. What are some of the obstacles you have with some of the people who perhaps aren't naturally, you know, inclined that way? You know, sort of convincing leadership, convincing.
I've no idea what you're talking about. Everyone.
I know, and I suspect you know that sometimes there's a real, you know, there's an internal discussion, hopefully not a battle, but there's an internal discussion around why should we do this? And particularly when you're thinking about, as you say, relocating your office, and I'm sure there are other elements to it, but part of it was spend money on an office relocation because it's a good sustainability decision. Tell me a bit about engaging some of those internal stakeholders.
Well, I think, look, first of all, you've got to understand what their drivers are and then appeal to those.
Yeah.
Okay? It's very rarely that a single decision is made on sustainability. So please don't hold out and expect every decision to be based on the values that, you know, presumably most of us listening today, you know, take very seriously. But build in gradually. Every decision is about layering things up.
Yeah.
Right? Adding those different sort of elements in there, and you will find pretty much that every element of the business has a sustainability piece and a sustainability story. So bring those out. I found that if you talk about it in things like so brand value, risk and opportunity, so actual business value, if you like, top line.
Yeah.
If you start to think about those sort of, you had those three buckets that are very appealing, obviously in financial services. You know, what we're doing at the moment is using sustainability to engage with brokers and dealers for motor finance, for example.
Yeah.
That's working at the top line.
Yeah.
Working on climate risk is obviously all about running a good business. And I don't know what the third one is, I said, but I'll come to it. So basically it's about bringing it into the part of the business which is relevant to, you know, what the business you're working in. So I've worked in a number of different companies, and the different drivers will mean different things. And then when you get individuals that are perhaps challenging you on that, you've got to understand their perspective, and then try and build up confidence and trust with them, and find out what is behind it. What's driving them? Is it P&L? Is it brand reputation? You know, whatever it is.
Yeah, and I think, I mean, that certainly resonates with me in terms of what we do here at Climate Impact Partners, and that is every single one of our clients is going to be slightly different. They'll have a slightly different ambition, they'll have a slightly different goal, and what we need to do is work out what they want to do, where do they want to get to, why are they doing this, who do they want to talk to about it, and how do we craft a solution for them that fits with their business. Because as you know, we might all be driving, well, ideally we're all driving towards net zero, but we've all probably got a slightly different idea of how we get there and what we want to see and what we want to do along the way. So yeah, that resonates a lot with me, that kind of understanding what the individuals or business, what they want and need, and how you can engage them in the journey. With that in mind, tell me a bit about what next.
Yeah, okay. So never a dull moment in sustainability. So some immediate challenges. The Scope 3 interim target.
Yeah.
It's really complicated. Basically, due to mortgages and houses, we've got a really, really challenging housing stock in the UK.
Yeah.
So trying to reach a science-based target for mortgages is, well, it's virtually impossible.
Yeah.
If anyone knows a way through this, then please get in touch. I mean, just simply because if you decarbonise the grid and also raise everybody's house up to, you know, B or something, you still can't get an interim target.
Yeah.
Because obviously you need to cut really quickly.
Yeah.
And to substantial emissions reductions in that 2030 timescale.
Am I right in saying I think we have on average the oldest housing stock in Europe?
I think so.
I think we do. And tell me a bit about sort of the customer view at the moment. I mean, my feeling is customers do get it now. They do. I mean, just for financial reasons, they want a more sustainable home. Are you seeing that in terms of the reaction from customers to sort of home improvement options?
Yeah. So obviously for our home improvements, that's sort of unsecured loans. This is people coming to us.
Yeah.
So look, fundamentally, if people knew the facts behind things, I think the floodgates would open.
I agree.
We had Auto Trading come in and participate in ran a sustainability trading workshop a couple of weeks ago. Auto Trading came in and gave us a myth buster on electric vehicles.
Right.
Check out their website on that. It is awesome.
Yeah.
And once you know, they have an amazing amount of data. And this is not, you know, media hype, whatever. They have the data to support it. And it's just extraordinarily positive in terms of motor vehicles. So I think getting past the hype, the negative media press, the Luddites, etc. I mean, you know, that's the challenge. And if we can do that and set a customer journey. So what we're really trying to do at Tandem is to partner. So bring the money together with the technology and the service providers and the education, the vital part, so the customer has a really easy journey. Yeah. So yeah, that's the route forward, I think.
Yeah, absolutely. I'm conscious of time, and someone's going to put a time check on me in a second, so I'm just going to run through and check if I've asked all the questions that we wanted to cover. I mean, one thing obviously we'd love to know for purely personal reasons is, as you said, you've chosen us as your carbon offset provider. Would love to hear just perhaps what stands out in terms of, you know, how that's worked out, perhaps what we've worked on together, and yeah, what you have enjoyed in terms of working with us in that.
Yeah, so I think it's a really important sort of addition to our carbon climate change narrative, you know, reduce our customers' emissions, work on our own emissions, and right through the value chain, and then offset on the journey what you know, our operational emissions. Gives us a great story to tell, which is important when you're pushing, you know, as a greener bank. What we liked was that it was a high quality selection of high quality projects, and the one that we chose was as close as we could get to our business. It was rooftop solar in Africa. Yeah. And we felt that really resonated with us, so it sort of built the narrative as well. Yeah. And the support that you've given us on, you know, how to market, just the language, you know, I mean, I mentioned greenwashing, it does come into everything we write and message now. Just being able to get the right message across of what we can claim. So we can claim that we're carbon neutral on the way to net zero.
Yeah, great. Thank you for that. I mean, it was slightly an intentionally leading question, and I think it's because you've spoken so much about kind of the journey and, you know, sort of working with people, collaborating with people. And so I'm delighted that you've seen and felt that, because that's exactly how we feel in our client relationships. Is everyone's on a journey. Our role is, I think, to your point, be a trusted partner, understand what they want and need, and help them and help them on that journey. I know one of the things we were really interested in hearing about today was your kind of general insights and advice to support others who might be embarking on this journey. So what do you think are the sort of most important fundamentals for sustainability professionals as they start or they continue on their net zero journey?
Yeah, I think it's to recap. So it's a long game, it's a team game. You've got to be resilient and stay positive. So long. It's a very dynamic environment, to work in, but it's also, so you've got a lot of short-term things going on.
Yeah.
Your real impact takes time.
Yeah.
It's not easy to see, results in 3 months.
Yeah.
Got to work with a team. Typically in sustainability, many companies, you don't have a big team to work with relative to other parts of the business.
Yeah.
Must engage right across the organisation.
Yeah.
And outside as well, depending on obviously what business you're in. Your external stakeholders will have more or less influence.
Yeah.
Resilience. You'll get buffeted around. There's lots of changes. It's sometimes seen as an add-on. Certainly, in my early career, it was quite strange to have a sustainability profession.
Yeah.
So stay with it. And stay positive, because there's so much of what this is about negative stuff happening in the world. And then on the flip side of that, you see the opportunity to really make an impact.
I was going to say, what's the reward for the journey?
Yeah, absolutely. I mean, it's the purpose. It really is. It's, it's inspiring. I've no ambition to retire. Change the portfolio. But just carry on doing it. It's very
absolutely. Rewarding. And in terms of impact on business, the reward for the journey, tell us about the hopefully positive impact on the business.
Well, for example, so one of the rewards is that we've saved our customers around about 74,000 tonnes of carbon. That's great. We're now sort of footprint ourselves. That's a big chunk of that. And this is a really, really important part. The housing is such a massive part of the country's drive to net zero. So we're at a really key stage here where you can see it every time I go to an industry meeting. We're kind of edging closer and closer. The sort of Venn diagram of society, industry and government are getting closer and closer on this. And that's really exciting to be at the point where you think we can change policies, we can implement ways of actually making an impact.
Yeah, perfect. And I think final question is thinking about your journey, and it's been a long journey and it looks like there's lots more to come. Take us back to the very beginning. What do you think inspired you to get started, to start on this journey in sustainability?
Yeah, I've got to hand it to my mum, actually. She's really involved with nature and the outdoors, and she sort of took me out a lot to go bird watching and picking mushrooms. Not those types. She really inspired me. And I think the other first, my very first business trip, I came out of my masters, and the day after graduating, I was on a plane to North Siberia into the Arctic tundra in February. So I remember that.
I shiver just thinking
quite
about
incredible.
it. Yeah, perfect. Thank you.
So it's nice to have a fireside chat.
Talking about the Siberian tundra. It's so interesting because I think I credit my mum as well. We kept ducks in our garden. We lived in a town. We kept ducks in our garden, and she grew her own vegetables. And I remember once asking her about rubbish and recycling, and she explained to me where rubbish went if I didn't recycle it, and I was just horrified. It just
education, isn't it?
It's
so important.
And sometimes it's those real fundamentals, just reminding you of why you do these things and what happens if you don't. You know, it really is. It takes very little, I think, to just find that thing that lights that spark of inspiration and motivates you to go and, I suppose, fight the good fight, as they say. Thank you so much, James, for your time and for your perspectives, and for your passion and leadership. You know, you've been leading from the front for a number of years, and it sounds like you've got no ideas about quitting that anytime soon. Turning now to the chat to see if we have any questions from the audience. Brace ourselves, let's see what we've got. We've got quite a few here. Oh, this is pertinent. What's your opinion of the recent departure of a couple of American banks from the Net Zero Banking Alliance?
Well, yeah, that's interesting. So I think, look, I hope, and I've not really delved into American politics because frankly, I've just find it so incredible. But I suspect that this is largely due to regulatory compliance, where the government is, changing the regulations over there so quickly.
Yeah.
I think that's what's driving a lot of this, this change.
Yeah.
So I would say that it is, it will pass with this government.
Yeah. I was actually at an event this morning, the Economist Sustainability event, which was really interesting. And John Kerry did a keynote speech, and one of the comments he made up front was really simple and really inspiring. And what he said was that the market effectively is far more powerful than a single elected official. And I think it's a helpful thing for us to bear in mind as, things ebb and flow as they do. I'm conscious now of time, and we have gone slightly over where I was meant to get us to. We hope the audience found this session interesting and useful. To that end, we're going to post a quick poll, and it's just one simple question. How would you rate the usefulness of this webinar? So if I give everyone a minute just to pop their answers into that. I'm told we won't be sharing the answers immediately, so I'm going to look forward to seeing those answers later. I will share with you how useful and interesting we were together. There are a few more questions there in the chat. I'm so sorry we didn't get time to get to them. We will follow up with any of those and respond to people directly. If you have found the session useful, as I mentioned at the front, this is the first in our session of In Conversation with webinars. The next, in honour of Women's History Month and International Women's Day, is going to be Women Accelerating Action in the Carbon Market. It's going to be on the 20th of March. Prominent women leaders from Estée Lauder, VCMI and Climate Impact Partners are going to highlight the critical contributions of women driving innovation, integrity and impact in the market. So hopefully if this has been interesting, you will join us there. And with 1 minute to go, it just remains for me to say thank you so much again, James, for joining us. It's been a real pleasure to have you here, and wish everyone a pleasant afternoon.